Good morning, everyone. Thank you so much for your patience. We are very excited for this morning's meeting. In case you haven't noticed, it's a busy start to the legislative session in Vermont, and we're seeing quite a bit of activity on the national front. So we have plenty to dive into this morning, but we're really glad to have such a large group of Vermont credit union leaders. And for everybody's awareness, we are recording this morning because we had quite a few people that had other commitments, but certainly will want to be a part of the discussion. So this will be recorded, and we will be sharing this recording with other Vermonters. But excited to get started this morning. And of course, many of you know our friends at the Necrason Group, who are our lobbyists and our governmental affairs team. And we also have joining us this morning from America's Credit Union, Andy Dennis. And I'm going to let them introduce themselves, and then we're going to have a robust discussion both about what's going on at the state level and the national level. We are going to open it up for questions, but certainly if you have something that you want to not forget, go ahead and type it into the chat and we'll keep track of those as well. But thank you for joining us. Adam, if you want to kick us off this morning.
Glad to be here with everyone. I am Adam Necrason, here with my colleague Jessica Oski. We are a Montpelier-based government affairs firm that has for probably 15 years been the eyes and ears and state house lobbyist for AVCU. Jessica.
I'm Jessica Oski. I work with Adam. I cover sort of the day-to-day issues that come up for AVCU. Adam and I work together closely. We have a bigger team that covers issues here. I've been lobbying for a long time.
Andy.
Hey folks, good morning. Apologies, I've got a little bit of a cold and I'm still fighting through. Andy Dennis, I'm with America's Credit Unions. I was formerly with CUNA. Prior to the merger, I head up all of our grassroots, state and federal, and manage all of our state policy work.
Great. Thank you so much. We're excited to get started. As mentioned, there is an awful lot of activity that we're seeing both in Montpelier and in Washington. And we're happy to hear from our governmental affairs team and get an update of what they see as the most pressing issues and how we can all stay engaged and involved this year. Adam, I think you're going to get started.
Great. Glad to be here with everyone. And I'm going to level set at the top, but to jump right into your lives as credit union leaders, things that we are going to be talking about that are hotspots: property taxes, which many of you kind of manage for mortgage cut members; interchange, source of revenue for credit unions and kind of controversial; data privacy, how you manage data, and yes, you and the hospitals keep it tight, but your friends in the banks sell it, and it's controversial. Coerced debt, how are we working with members that are survivors of domestic violence, and what types of policies should we be required to have to relieve them of potentially coerced debt? There's more, and we're going to unpack these issues. Before I go to the big level set, which will sound like a Sunday morning news talk show for 5 minutes, I just wanted to touch the buttons that are hot topics in the State House and in DC that could end up impacting your work and how we serve our members. Now, zooming all the way up and out, consider this just the level set on state government affairs in Montpelier. And it's not all about credit unions, even as the big thing you're kind of attached to because of property taxes. And the big thing in the State House is education reform and trying to adjust how we govern and pay for K through 12 education. Our property taxes have reached a super high level, and it's unaffordable for many Vermonters, and lawmakers are grappling with what can we do about that. We have almost 200 school districts, and that's a lot for a small state. The governor leads, Vermont with a strong hand, and we've had his State of the State address and budget address, and those are the two big things in January that get everything started in Montpelier. And Phil Scott's very popular, as are the Democrats in the legislature in their districts. So we have this bipartisan tension underway with the governor this year focusing the state of the states on one issue, education reform and property taxes, and demanding that the legislature move forward on district consolidation and payment reform. He said for the first time in this is his 10th year, I will not sign budgets or fiscal bills unless we do this. He laid out an ultimatum and, was really demanding the legislature try to advance education reform. Inside the State House, lawmakers are a little bit like, okay, great, an ultimatum, yet it's really hard to figure out how to merge school districts, how to mandate that, how to force that into Vermont. This one thing we've kind of come to understand. These are general numbers, but just you'll get the point. 80% of Vermonters want their property taxes reduced. 80% of Vermonters do not want anything to change with their school district. And so you could say the same thing on healthcare. Almost all Vermonters want healthcare to cost less, particularly employers paying for it. And all Vermonters want greater access to healthcare. So on the two biggest issues of the day, the electorate is cognitively in conflict with itself. We want more for less. And lawmakers are grappling with that in a mighty, mighty way. Into the tier 2 issues, driving for housing, more housing of all types is, for the last 5 years been a super top priority for lawmakers in a bipartisan way. They've enacted regulatory reform. 300 million of the $2 billion we got from the COVID era one times pumped into housing construction. Thousands of units were put into construction because of all that. It's the end of COVID era surpluses. And so the state budget is now both directing any extra money that's in Montpelier to buying down the property tax increase and trying to see if there's extra money around for spending on housing and things like that. We'll get back to these credit union issues that I articulated, but what I know is this one thing: when Vermonters' property taxes go up, many people find out about it through the credit union saying, we're increasing your monthly payment because we collect the property taxes. And so you're the messengers of what is a very disrupted space. And that's challenging for you. I will pause because I know this is the high level, but we really want to talk about interchange and data privacy and coerced debt. But Carrie, over to you to steer for a minute, because that's kind of the high level and showcases a few of the issues that you are working on.
Yeah, absolutely. I think those are really important topics for us to be aware of as we support Vermonters, generically over the course of their financial lives. And there are a couple of really important issues cropping up in the very near future, as in coming days, that we will ultimately look for some feedback from each of our credit unions. And Jessica, I'd love for you to dive a little deeper into what we're seeing, particularly around course debt, data brokers and data privacy, and what we may be seeing as interchange crops up. Of course, we're waiting, and I think Andy will speak to what we know about Illinois. We're waiting to see what may happen in Illinois, but it is on lawmakers' minds in Vermont, and they're pressing forward with that.
Yeah, sure. Interchange is top of mind for a number of lawmakers. They would at the there's split minds about it. Um, Everyone is waiting to see what happens in Illinois. Granted that whatever happens in Illinois will likely be appealed. So a final outcome from Illinois is months down the road. And that will give, well, we will urge lawmakers to interpret that as a need for pause on this. Let's wait until there's a final outcome from Illinois. Let's not get our let's not move forward with changes to interchange until we know what the courts are going to say, because we'll end up having to backtrack or getting sued. And there will be lawmakers that are going to, if the consumers win in Illinois, there's going to be an effort to try and push something through. There's many minds, and we have very different lawmakers in charge of this in the House and in the Senate. They don't agree on a lot of things. So a strategy that we will use is to try and muddy the water and stop things from happening. It's much easier, generally much easier to stop legislation from moving than it is to move legislation that you want. To touch on a couple other issues that Carrie mentioned, coerced debt. This is an example of how we tried to slow down the bus. Last year, there was a bill on coerced debt, a very sympathetic issue. People get they get forced into purchasing things, getting into different kinds of debt under in bad circumstances, and then they're stuck holding the bag. And again, we're all sympathetic to that, but there's a reality of doing business, and how do we balance those two issues to try and be fair to people that didn't intend to get into this debt, and be fair to the businesses that are trying to operate by lending this debt. And so last year, when this issue came up, we urged a study and bringing all the stakeholders together. And that study went to DFR, the Department of Financial Regulation. They came out with a study, with a report. They had been requested to bring forward legislation, but in their report, they said, we really couldn't find common ground among the stakeholders here. And they laid out the issues, and that way they sort of punted. And now it's going to be up to lawmakers, the advocates for changes to coerced debt, to bring something forward, and for us to try and urge a rational approach. And the big issue is going to be, are we going to have to take a pass on secured debt, or are we going to be able to insist that secured debt is repaid or somehow dealt with in a rational way? And one of the things that we will do is look to other states. And when Vermont is leading the nation, which we do occasionally, it's a dangerous place to be. It's a scary place to be. It's much easier to follow other states that have already gone this direction. And what we're finding is that states that have gone down the coerced debt path have protected, for the most part, protected secured debt. The advocates are pushing for secured debt to be part of what is forgiven. We'll be pushing back. So that is going to start to heat up in the next few weeks, and we'll be watching it closely and being involved and working closely with the banks on this. The other issue that Carrie mentioned was transaction holds, or didn't mention, but I think that's another area where last year, this issue came up. When there is a suspicious transaction, how is there a uniform way that consumers should be protected, and that financial institutions should respond? It's complicated, and so the legislature asked DFR to study it. They came back, and they have some proposed solutions that are sort of ideal ways that financial institutions should respond, but not mandated. And that's a much preferred approach on a solution like this. So here, here are the issues, here are some ideas for how you should respond, but we're not going to have a one size fits all. And that's what we're hoping will come out of transaction holds. One other issue that I'm just going to get as an example of how we do our work. We study the bills that get introduced on a regular basis, and then we study committee schedules to see what they're going to be talking about. This morning, there's a bill in House General Government Operations and Military Affairs, H 680. 685, I think, and it's a bill that we'll be tracking. It's a bill that would 645, and it's portrayed as a consumer protection bill that would, among other things, establish a registry of secure real property transactors who utilize an approved identity verification. So this would be something. It's in the weeds, but it would impact financial institutions, and it would require to register with a registry to prove that you're who you are, and that all the people that are involved in a real property transaction are able to prove who they are. Sounds like a good idea, but when you dig a little deeper, turns out that the state archives and records management people don't want to do this. The realtors don't think this is a good idea. So what we do, we watch these issues, see where the stakeholders are, see what's, whether there's traction on an issue like this, and then decide, do we want to get involved, and what is our position going to be? Within where major stakeholders like the archive, like the state records managers and the realtors don't support something, it's unlikely that a bill like is going to move forward, at least as introduced. So we'll be paying attention and decide, watching that and decide whether we want to get involved. And that's sort of how our days work, and how we flag issues for you all. Try and wait until there's something to be concerned about, and not get really worked up until there's meaningful action, but also want to be prepared when something comes up. So that's an example of sort of what we're doing. On data privacy, I'm going to throw that back to Adam, but it's coming, and we're working hard to ensure that that credit unions are, we're already regulated, our data is already regulated, and we're hoping to be exempt from that bill, from the provisions of that bill. And it's going to require more work, because some lawmakers want to ensure that want to not have entity level exemptions, which is what we're looking for.
Great report. And just to kind of supplement some of it, on the interchange, the issue is, like exempting tips and taxes from interchange, which is kind of disruptive and hard to manage. On data privacy and interchange, you guys hear this a lot. We're financial institutions. The banks do the behavior that lawmakers are after, and the regulations land on us and them equally. And so while we are the actors that are most responsible and worthy of trust and light touch regulation, lawmakers hear a ton of stuff, like you finance a car and then they're selling your location data, and some vendor is able to monitor where you're going because you've financed a car with Chase or something like that. And so in these hearings, it gets really unseemly fast. And you're like, oh gosh, well, we don't do that. But people do. Banks, Wall Street. So you deal with this in Washington, and back to you, Carrie. But we're often caught as in the middle as a good actor who is getting heavy touch regulation thrown our way. And for all of you out in the credit unions, we know what matters most is what laws are changing that are going to disrupt our business workflow. And we appreciate you being here and connecting to these hot button issues, so that you can feel what's kind of out there and coming in your space. Carrie.
Yeah, and because ultimately we will absolutely go to you as the experts and the people that are working this on a day-to-day basis with our members to talk to lawmakers when an issue comes up where we want you to be able to provide real-world examples of how this potentially impacts your business, but also how it's going to impact Vermonters. And so, we appreciate you high level understanding what's going on, because the reality is in the coming weeks, we may need to go directly to you to ask for feedback about, how is this going to impact members in a real estate transaction? How is this potentially going to impact your collections efforts if secured debt were included in, a potential borrower saying, I was coerced and I shouldn't be responsible for this debt? And how is this going to impact the credit union financially, and also, for your collections efforts? And getting real world examples from you all as the advocates for both your members and to lawmakers as a credit union will be important. And so we appreciate you being here. Andy, a couple of reasons why we're so glad to have you this morning, not only because you can provide the national lens, what we're seeing in Washington, which has been very active in the last couple of weeks, but also, as Jessica said, it's so important to us to be able to look to our National Trade Association to say, help us out. What are we seeing in our neighboring states for legislation that we may be able to learn from and go to for resources? So thank you for joining us, and we'd love to hear from you.
Yeah, thanks, Carrie. Thanks for having me on, folks. The good news is Jessica, Adam, and I have very similar topics, so neither of us are widely outside of what we're watching. From a national perspective, I'll start with interchange and then go through a few other issues and then jump over to the federal side of things. And goodness, I feel like I could talk about interchange for the next hour or so, but I promise I won't do that to y'all. So, as was mentioned, we are still waiting for a result in the Illinois court case, the IFPA. Where we stand right now, the national chartered banks received a federal preemption back in June of last year, which exempted them from adhering or being compliant with the Illinois IFPA. State chartered banks, federally chartered credit unions, and state chartered credit unions were still under that law and had to be compliant. That is what the litigation is still focused on. We are still waiting for a decision from the courts on whether or not those three types of entities will also receive preemption because national banks received preemption. We were supposed to hear something prior to Christmas, still waiting as of last week when we do our coalition group updates. Still nothing. But as Jessica said, even after that decision comes out, if it's positive, wonderful, we'll continue to move. And if it's not, we're still going to continue to drag for several more months until the case is completely resolved. Right now, the team in Illinois, Carrie's counterparts, are working on a repeal effort legislation, which might solve a lot of our issues. But just like Vermont, many other states are waiting to do any sort of introduction so that the bill does not go into court. Now, many states are doing that, but quite a few have already jumped in to the 2026 interchange efforts. Last year, we saw about 24 bills introduced throughout the country. This year so far, we're really only 2 weeks into sessions for most states. But we have an introduction in New Jersey, West Virginia, Oklahoma, Arizona, Indiana, and we are expecting one in North and South Carolina as well. All of our teams are on alert and attending those hearings and watching out. As was mentioned, hearing from folks on the ground is incredibly important on these efforts and what the impact will do, not just to the bottom line, but the ability to offer affordable financial products, secured credit cards, other programs that use interchange revenue that support members or underserved communities is really that tangential. What is that unintended consequence that these bills are going to impact? So moving off of interchange, and I will unfortunately talk about federal interchange in just a moment. Some of the other themes that we're watching for this year, on the bad side, more data privacy, as Adam and Jessica mentioned. We are still looking for those GLBA carve-outs, but the new twist that we're starting to see is biometric. So, your eyes, your fingers, your facial IDs, new compliance for any biometric data that is used. And at the same time, we are seeing this really interesting dynamic between the administration not asking, but telling states not to introduce or pass any artificial intelligence legislation. But yet we have seen quite a few red states do just that. And in our minds, we're seeing if there is an AI framework, there needs to be a data privacy framework. Right now, we have a patchwork of state privacy laws, which is very difficult, especially when we're doing any interstate commerce, any cross-border transactions. And so some of our calls are for the federal government to pass a privacy standard that will also include artificial intelligence. A meeting with a lot of the legislators, our folks across the country have said that legislators don't understand kind of the differences in AI and how different institutions, different entities use it. From automated decision-making systems, we've seen some bills introduce that if a life-changing decision is made by an AI system, then that consumer has quite a significant amount of recourse to either appeal that decision, some with civil penalties if there was not a human review of that AI decision. And so operationally, it's going to cause a lot of disruption to our shops. The three other issues that we're watching, earned wage access has been coming up for a few years. And really the last 2 or 3 years, members have not really paid any interest to it from my perspective, but it's starting to gain a lot of momentum because these EWA providers are entering into the credit card space. And so there's a lot of regulatory efforts that they are escaping. And for that even fair playing field, we're asking, okay, if they are an earned wage access provider, are they also adhering to TILA? Are they also adhering to AML? Are they also adhering to all these other different things that traditional financial services have to watch out for? Now, the two good things that we're starting to see a little bit of movement on: public deposits. In Vermont, from the latest, it looks like the books are silent. So in some cases, that would be viewed as permissible. But in a lot of other states, it is a very nasty fight between the banks and credit unions. And really, it's one of those rhetoric battles from the trade associations, because oftentimes the credit unions cannot accept more than a certain percentage of public funds, municipal deposits, whatever you'd like to call it. And that is really a drop in the bucket from banks. So some of the strategies that we're looking in other states, such as Kentucky, where I'm from, there are some out-of-state banks that are holding onto Kentucky state public deposits. And so we are working to codify that language that credit unions, state chartered credit unions, let me be specific, can accept public deposits under the FCUA. Federal credit unions are allowed to accept, but also we need to codify that the state is allowed to deposit into a credit union. So we're fighting on two fronts for that one. And finally, we're seeing some increase in credit union powers and parity modernizations that are increasing, which is really great. Things like investment authority, QSO powers, streamlining approvals. We all remember during COVID, electronic lien titling, that is still happening. There are other remote online notarizations that are still happening. So things to make life just a little bit easier as we move forward. I'll pause for just a moment if there are any questions in the chat, and then I'll jump over to the federal. What is happening? We have a daily stand-up, and so there's an update that I'm sure things have changed dramatically since the member webinar yesterday. But as we stand right now, President Trump has called for Congress to do a 1-year 10% APR rate cap on credit cards. That is a reversal from his executive order, which had a deadline of 2 days ago. That never came to fruition. So he has called on Congress. We have the Hawley, Sanders, Warren amendment that is ready to be attached or introduced onto any vehicle that will be moving. The only things that will be moving soon are appropriations bills, and so we feel relatively confident that people would not want to attach anything to appropriations. However, on top of that, we are seeing the Credit Card Competition Act, the Durbin-Marshall interchange bill, which is separate from state level interchange. As a refresher, at the state level, it is a prohibition on collecting interchange on sales tax, tips, and in some states, removing the honor all cards requirement. At the federal level, it is mandating that a third rail, a third option, be available other than Visa and MasterCard, which presents quite a few issues with fraud, security, things like that. So CCCA, which was also endorsed by President Trump, has kind of morphed itself onto the rate cap, and at the same time is being smushed together with the housing affordability issue that is a priority for the administration. So these three separate issues are coming together as one, and that's where a lot of the muddy waters is coming from. From the very high level, our position is that a government required cap, a government price control is not good. Obviously, federal credit unions are already at that 18%, but we have seen in the past, well, the economy is not doing well. Let's drop that down to 15. It's not doing well. Let's drop that down to 12. And so we don't want to provide any wiggle room that we are okay with any sort of control, because as we have seen in past, things can start to decrease over the years. On the Credit Card Competition Act side, that bill has been introduced by Senator Marshall of Kansas. And it is an internal fight right now about whether or not it will be given a hearing, whether it will be given any floor time. We are on alert. We have action alerts for both of these issues on America's Credit Union's website, and right now it is just what we're calling grass top. So the folks on this call, your senior leadership team, we're not going to any membership level yet. If we recall from Don't Tax, it's going to be a long fight. We don't want to fatigue out our greatest asset. So just the folks on this call, your peers, were asking to engage. On the CFPB question in chat, Robert, thank you. Not much. So last year, after HR 1, that funding was decreased. We saw that the DOJ is no longer working with the CFPB to enforce any actions. Really, they are on the downside and rolling back a lot of rules. The deregulatory project that the NCUA is also working on is impacting other agencies as well. And so we're starting to see more flexibility and rollback of the Biden era regulations that were in effect. And I can follow up with this group to get some more details on that from our regulatory attorneys. Be happy to do so. And then last two things on the federal side that are positive developments. This week in the House Financial Services Committee, there are two bills that will be marked up, which is a very substantial and progressive step forward. The first one is the Financial Reporting Threshold Modernization Act. That's HR 1799. And it just raises the CTR, the currency transaction report threshold, up from 10,000 to 30,000. And it increases the suspicious activity report, the SARS threshold, from 10,000, or excuse me, to 10,000 from 5,000. And then Representative Barr has introduced an indexing bill, the Community Bank Regulatory Tailoring Act, that is HR 7056. And that will increase the asset thresholds in the FCUA for small credit unions up to 34 million from 10 million. So we're indexing based on inflation as we increase. And then for large credit unions, the audit requirement is going to be up to 2 billion from 500 million. So really positive steps there. And we'll see how that hearing goes today or later or tomorrow. Kara, I think that's all I've got.
No, that's a great list. Thank you, Andy. And We are planning to hear from Chairman Hopman at the end of February. He'll talk a little bit more about the deregulation project at the NCUA, as well as the 2026 priorities, which were just released last week as we move to the next audit cycle. But certainly appreciate that feedback. And as you all can see, there's a lot on the horizon. And just like in the State House, we're waiting a little bit to see how it unfolds, and we'll need to react quickly, right? Hurry up and wait, and then be ready to go. So great feedback from both the state and national level. Want to open it up to see if anybody has any specific questions, things you may have heard about, things that you're wondering about. There are some other minor bills that we're watching. There is a solar bill happening right now that some of you that are working in that space are interested in. We also have been in touch with Department of Education and watching some things unfold as they've made recommendations for financial literacy as a part of graduation for future years. So definitely some other things that we're keeping our eye on as they unfold. Andy spoke about a couple of issues that we're watching in Vermont as well, both around AI. This afternoon, there's going to be some discussion about, what does it mean at the national level? What could that mean to us? We have also seen in Vermont, some movement around potential data privacy and what that could mean based on biometrics. So very similar things. And as Jessica mentioned, we watch to see what goes on at both the national level and our neighboring states, because it could impact us down the road in Vermont. So any questions? Bob, I saw you come off mute.
So I got a couple of questions. Bob Lake with Green Mountain Credit Union, Carrie and Adam. We had some initiatives, and Carrie and Joe had met with the Deputy Commissioner Ferentz. And I don't know if you're involved in any of those discussions. And I realize we're only 22 days into the new legislative session. But has anybody heard if there's any opposition in any of the committees to what Aaron was referring to as some housekeeping topics regarding updating the credit union statutes for board meetings and joint deposits, loan to non-members, member voting? So that would be one question. The other question is probably more for Mr. Dennis, in that, has he heard anything about combining the NCUA and the FDIC? And that was early on, a lot of bluster, and I think that's kind of gone by the wayside, but what have you heard? And then the third would be any talk about upping the share insurance from the $250. So there you go.
Well, I'm going to let Jessica take the easy one, which is DFR's housekeeping bill, which was heard last week in House Commerce and Economic Development.
Yeah, and Carrie did testify on that, and it was a good intro for the committee to Carrie, and went really well. The committee approved the bill with the housekeeping amendments, 10-0. One person was absent, and it is now in House Ways and Means, where it needed to go because it had a fee in the underlying bill. It'll likely get voted out of Ways and Means. I think they're doing it this morning, and then it'll go to the House floor. We're not expecting it to. It'll be a long report, and a long and boring report, because there's a lot of sections to that bill that are dry. But we expect it'll pass the House and then head over to the Senate. It's unlikely that the Senate will take it up until after crossover, which is like around the second week of March. So we'll expect further action by the Senate later in the session on that bill.
Andy, thank you, Jessica, anything that you have for insights about combined regulatory bodies or the share insurance?
Yeah, Bobby, you're exactly right. It's gone by the wayside. We are seeing, one, logistically pretty much impossible to combine FDIC and NCUS IF. National NCUSIF. There we go. Always get those letters mixed up. That is really not an appetite for either side of credit unions or banks. So that is gone by the wayside. We are seeing still that ongoing court case with the governor or federal governor board on whether or not Lisa Cook can be removed. And so there is still a lot of hesitation of doing anything drastic with agency heads until the Supreme Court weighs in. But to answer your question, that has not come on anybody's radar since, I think, last summer.
Right. Any last minute questions? Well, this was a great primer, and really we are so appreciative to Adam, Jessica, and Andy for joining us. As mentioned, we'll share this recording with your colleagues, so if there are any additional questions, please don't hesitate to send our way, and we'll make sure to get answers from the experts. But again, we appreciate you for joining us this morning. Your engagement in advocacy is really key to our success and to supporting the efforts of our governmental affairs team, but also ongoing for advocacy in the state of Vermont and with our national colleagues. So thank you so much for joining us. Do want to just put in a tiny little plug. We will be at the GAC at the beginning of March to speak to our DC legislators, and we did just book April 7th. We will be in Montpelier for Vermonters at the State House. So be on the lookout for those events where we will have a chance to speak directly to our lawmakers. So thank you so much. We appreciate your time. Stay warm, everybody involved in the days ahead. We have some cold weather coming. So thank you so much for your time. We look forward to seeing you again soon.